The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, Tiger Technicians Hour. On this Wednesday, the 7th of May, we're looking at, I'll go backwards. So we've got the yields right now. You've got the up 1930 seconds and the bonds at 115.5. So the yields are coming down a little bit. More importantly, what we're looking at here is how are the different indices, especially the SMHs, the semis, how are they doing right here? Well, the semis are kind of stuck, up 45 cents to 216.04. Made a peak C, holding very nicely. 9-period moving average over the 14. The MACD is good. The stochastics flat at 89%. Great. On-balance volume's a little weak. So that just says to me that we are still beholden to the strength of the semis to really consider a big break to the upside or just going sideways. But more importantly, we are looking at this. Look at the divergence. You've got the Dow at a peak C underneath its 200-period moving average of 41,577, up 247 right now. Very nice move after yesterday's pullback. But look at the weekly chart. Right on that 14-period exponential moving average, I want to see that by Friday. I want to see it up in the 41,700s or higher. And here we are at 41,071. That's a long way to go. So that's wishful thinking. But in the meantime, the S&P, look at the divergence. The Dow is under its 200-period moving average. The S&P is on it right now as we're speaking at 5632.36, up 25.45, right on it, and it's only at a peak B, and the technicals are strong. The stochastics at 90%, MACD is strong. The relative strength has pulled back a little bit, but it's still doing well. And all I can say is that the chart pattern, regardless of Fed, regardless of tariffs, the chart suggests that there should be a move. Did I do that in the SPY? Let me just check. SPY. Yes, I did in the SPY, which said that the earliest we could do was to get to the high that was made back on the 25th of March, up at 576.41 by today. Well, that hasn't worked out. I can't see anything like that happening today. So I have to take that. And remember, if you can't use the exact plumb line to count the number of bars on the left to the number of bars on the right to get back to where you were, you have to use other techniques. In this particular instance, I'm now moving it out to this candle right here, this little doji candle right there. And that says to me that if we are going to see a rally, the rally could continue for a little while longer to try to get to that level. And that level will now be, and I'll take the Chapman Wave Inside Track propellant, the Chapman Wave, this is the diagonal dashed green on the way up, repellent line. In this case, it is on the way up. So every time it gets there, it's got to break above it. And that says by, what date is that? By the May the 13th. There should be an attempt. When's May the 13th? May the 13th is Tuesday, less than a week to go. There should be an attempt to get there. Whew, that's a big ask, but I think it's a good, well, at least the trend line will be at 571.50. All right. So I'm looking at this and saying, as soon as we start to move quite nicely above the 200-period moving average in the S&P, that's going to be a very good sign. Let's go to the QQQ. Index 100, only up $1.78 at 483.19, lagging a little bit. That's what I meant by this divergence. But what's really important is it too is at 2 QQQ. Right on the 200-period moving average as we speak. It needs to push higher. Now, this one did very close in the time price match that I was looking at, get to 493.62 was the target, and it on the second it went to 490.91, just under it, pull back. Now, what very often happens in this particular pattern is that if the price misses, but gets very close in price to match the left side high, misses it in time, what happens is if the technicals are still strong, it powers right through. I hope that's the case. Powers right through and goes to a leg D. And then this former trend line that we were looking at becomes the target. So I'm just going to put it in. We'll see whether this unfolds the way the magic works in this particular pattern, if it's going to work. Now, what I normally do is I say, okay, that worked to that particular point. Where would the next one be? So I always say, if you use a technical approach and it's now redundant because you've already passed that time period, look for the next period. So the next period would say that this candle right, I would love to go to the doji candle, but that's just way too soon. So I'll go to this candle right here, and I'm going to choose to, there we go, press click, green. This is TradeStation. They have very nice technical tools. And it's one of the reasons why I haven't moved up to the latest iteration. On the very old, it's 95, I think it's called, and they've already moved on to new iterations. So this says by the 13th as well. By the 13th, we should be going to higher highs above the 493.62 level. That gives us 1, 2, so today is 1, 2, 3, 4, about 5 sessions. We'll see if that's going to happen, right? Let's go to the IWM. IWM is a Russell 2000, and it's trading right now at 197.59, up 0.82. And this one's a little different. This did the same thing, didn't get to the 203.33 target that was by yesterday. It went very close, and it hit the Chapman wave inside wedge target resistance line. And that means now I have to take it again and do that and choose this particular candle right here, just for the very short term, and say, now can you do the right side? Where would the right side be? It would be to the 11th to be able to get to 203.33. All right? So because I've changed that, I'm not going to do anything right now about it. The one on top has the next, in fact, it goes to the 14th, right to the 209.23. I don't want to get carried away. It's enough as it is to try to get from 197 to 203. That's, 5-6 points. That's a big ask in this case. Okay. SMH, let's do this quickly. SMH is the semiconductors. Semiconductors right now are trading up 40 cents at 215.99. Not really leading the way up, but holding okay. Yeah, I have 232.42, and I have to, when I say that I'm querulous. I don't believe that this is actually going to get there, but I've got it by the 14th, trying to get to 232.42. I'd be happy just with a leg D above 220, let's call it 221. I'd be very happy with that at this particular point. Okay, now we're going to get to something else. Within the context of all the different sectors, you've got Bitcoin up sharply today, up 2365, up at 97,775, trying to tackle the left side high of 98,615. Very good action. And look at the Chapman wave inside track repellent zone here in the weekly chart. Oh, if it can really move into the 101 area, 101,000 area, that's going to be a big deal. I'll be right back. Dow is up 190, up 200, S&P's up 28.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, we're back looking at the futures. Futures are really trying to do quite nicely. So we've got the Bitcoin doing very well. Just to go back to the gold, I want to see if it's pulling back further, down 31. Yeah, so this is very interesting because in the gold contract, you can see the MACD has not crossed positive yet, even though we are so close. So earlier today, we're at 3,448. The high that was made on the 22nd of April was 35.09, not that far away. And yet, I want to see that MACD cross positive to see if we're going to make some kind of a potential double top or break above it. But the stochastic's only at 38%. And on-balance volume's a little bit weak. Relative strength is okay, not great, but it's okay. The weekly chart is still pretty strong. And the monthly chart in leg D also is very nice. So within that context, let's look at GDX, because that's a question I had. What about GDX? So GDX, I'd be a little careful here. If you're in the GDX, I would say just keep holding at this particular point. We've taken a little bit off our gold position as it was going to the all-time highs. I have no problem with that. I want to keep as much of the core as I can. This is really important because it's the geopolitical economic insurance policy. That's all. Whether it's technical or not, doesn't matter. The technicals are still pretty good. The GDX, you did get an M formation in the 914, still positive. But look, here again, the MACD is deflected low. I want to see that MACD cross positive to really feel secure that there's going to be a test. In this case, the GDX high that was made at 53.25 on the 21st of October. How we get there, if we get there, is going to be very important. And what we do after that, because after all, look at the dollar. The dollar's, up 17 ticks at 99.41. It's done nothing. Look at the USD JPY. This is the yen. USD JPY. Look at that. Peak A, peak B, peak C, and it's now pulling back. Let me just type that in here. A. Remember, count each successively higher peak. A, B, C. If it fails from here, watch out, because that 140 level must hold the support. Otherwise, it goes back to the 139.63 200-period moving average in the weekly chart. And if you're looking at the monthly, that is a potential dreaded H. And so far this month, The month is young, but you have got the 9 slipping under the 14. That is let's go to the EUR. Did I just do that EUR USD? No, it didn't. So that's made a peak D, and it hasn't really broken to the upside or the downside. I can put a down arrow yet because the 9 is still strong over the 14, but the other technicals have weakened. So I'm watching this. So Bitcoin seems to have taken over. That's all I'm saying. And Bitcoin is holding very nicely up at 97,730. Now I need to go to the high-grade copper. High-grade copper is down sharply. We've got a lot of mixed signals here. 4.64, it's down 13 cents. I wanted to go to, I was asked about uranium, RURN. This is uranium. Oh, I haven't updated this. Sprott uranium miners, very nice. And I failed this time. I failed to get into our UEC, which I always get into, but we were so busy with other things. I'm not complaining because those other things have kind of mostly worked out. Not everything. TE. And okay, let me just do this live because some of you say in the Chapman Wave, can I sometimes spend a little time explaining? Yeah, so this is the URNM Sprott Uranium Miners ETF. Now, in the Chapman Wave methodology, when you get to a leg D and then it goes to a peak D, if within 3 bars it goes to a higher high, I immediately say, consider that there's an alternate count. That's called a Chapman Wave instant restart, and very often you can go all the way to 4 higher peaks. But just keep the alphabet going. Peak D, E, F, G. In your mind, you're saying alternate count E/A, F/B, G/C. And now we've got a G/C with all the technicals still strong, even the on-balance volume, which is becoming a little overbought, hasn't got there yet, but it's only a leg A in the weekly chart. So Jacob had been talking about uranium, and he spoke about the UUUU, which has done pretty nicely. It's at 4.61 right now, down a penny. It's just holding since a very big, strong move from the 318 area all the way to about 5, maybe 510, and now it's pulled back. But the UEC is the one that we always grab. This time I didn't. I wanted, didn't. And look at this move going from under 4 to 575 right now. Targeting, if the high today of 589 is taken out, excuse me, in the next 2-3 sessions, and it can actually hit 593, then there's a really good chance that the 200-period moving average of 6.09 will be hit. This is a uranium energy core. Next question came in. Where did it go? Disney. Is it time to buy Disney? Well, Disney today is, good grief, it's up $9 at 101.31. Isn't that interesting? I was looking at it, and I spoke about it, and I said, it's improving a lot, but it's going to take some news event to really get it to kick into gear. Talk about a news event. They must have had a really good outlook. It's up almost 10%, up $9.18 at 101.36. Whew, now what a difference, because even if it was up 4 points or 3 points, I'd say, into the gap. It's acting well, but it's not great. This is very good action. And this is what I've been talking about for a while, that when we start to see the old laggards start to take the lead, which says to me, you've got the 200-period moving average, which was the low of today at 100.31. That's at 100.50. So it was a tad under it on that big spike to the upside. That'll be the magnet line. If it's able to close nicely today, and then tomorrow it makes a higher high than the 103.31 high of today so far, that'll say you've got a good few days to go higher before you come and test the 200-period moving average. So let's look at KRE. This is the regional bank index, trading up 52 cents at 55.98. 200-period moving average is at 56.98. It just hasn't. It's beautiful in the sense that it's making higher highs and higher lows in this kind of large rectangle formation, which suggests that the left side high of 56.98, let's call it 57 right there, could be in the cards in either this week or next week. That'll be a good sign if we can break above it. The weekly chart's starting to improve. It doesn't look great in terms of the technicals, but it's really improving a lot. XLF, which is the financials, trading up 37 cents at 49.52. Yeah, this is a very select move right now, but look how nicely, look at that monthly candle, long wick. And now we're up in the higher part of the halfway marker. We're above that in the both the weekly and the monthly. This is a good sign so far. So Bank of America, which we've been long for a long time, at the 200 pre-moving average, just stuck there for about 4 sessions. If it can break above 43.10, 43.40, which is the 200 period moving average, is at 41.09 right now, that'll be a good sign. I can start looking towards the 42.50 area. So just slowly, one by one, these things are resolving quite nicely. I'll be back in a moment in another couple of questions that I've got that I need to get to quite soon. FXI. As we go to the break, this is the large cap China ETF. It went to a peak C yesterday, pulling back today, down 67 cents. I would say that the 34.10 to 35.70 area is good support. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
right, so we're back. The E-mini is doing quite nicely. It's up 29. This is a brand new, I think so, brand new buy mode in the 1-minute chart, but we finally got that D in the 5-minute chart, and it's still an A. I can't believe it. It's still an A in the 10-minute chart. But when the Fed, usually when the Fed comes out, going the half hour before, if the market is sharply higher, it suddenly pulls back some. If it's sharply low, it rallies some. Ooh, we're going to see this is going to be very interesting. As I say, I think tariffs, I'm using my words carefully, I think tariffs trumps interest rates. Just at the moment. We'll see what happens. All right, here we go. So we're looking at the, I needed to just do something here. Got interrupted. There was talk about the Celtics. I haven't been watching, but I know that I heard they didn't do too well last night. All right. So we've got, this is very interesting because I want to go to, skip this for a moment. I want to go to the crude oil. Look, so crude oil has dropped very sharply. Why is it not going to the oh, there it is. Okay. Crude oil is trading at 58.77, down 29 cents. It's just not, it's not performing like you would expect. The lower it goes, of course, then you start to think, well, is the Fed going to be looking at interest rates? Are they going to be looking at, are they going to be talking about crude oil usually signals, dropping like this signals some kind of a recession or a big market, economic slowdown? I don't know. I think it's more a geopolitical situation. That's all. Okay, now let's go back to the natural gas, which I was looking at yesterday. I said it held quite nicely. Today it's running quite well. It's up 14 cents at 3.60. Is this a trade? I was asked. I put it in my newsletter as a potential. I don't know yet. I needed to see the 9-period moving average turn green. I usually could wait and get it at a lower price. I would much rather have confirmation because the stochastics at 79.80, I like 80% or higher. So it's very close. And the other thing is seasonality-wise, is that a word? Yeah, seasonality-wise, is this when springtime, is that where you expect the beginning of summer for natural gas? Well, it has to do with other conditions as well. All right, so we're not doing anything just yet. I said I'd be looking at it, but if it does close, it doesn't have to close. If it pushes above the high of the 5th 2 days ago, this is the UNG, above 18.46, the United States Natural Gas Fund, that'll start at leg C, and then the left side high that I'll be looking at is 1883. That would be your target, and that would be if it's only in leg C and it's moving up that strongly, it should go to D, and that would start to really improve the weekly technicals because they are they're not looking that great right now. Did that. Here we go. Apple. Apple is trading down, up 45 cents at 198.90, down from the peak C high that we made 5 sessions ago. And it's just not acting well. Amazon is trading up nicely today, up 5.5 at 190.54. Yes, I think that it held the 9-period moving average. This is a good sign. This is going to help the general market. Let's see if Microsoft holding very nicely at 435.06, up $1.75 after the earnings, you see. So I'll give a little lesson here in terms of Chapman wave methodology. There are a number of ways that I look at gaps to the upside or gaps to the downside. If on the initial gap, the price, the very next session, can take out the high of the gap high day or bar and not the low of the gap up bar, that's usually a very good sign. If it does it for a couple of days, 2-3 days, it means that the body of the candle, high or low, in this case, the open of 436.50, let's call it 437. 437 is at least in the very short term some kind of base of support. If it can go, and this will be a peak C, if it can go above that little double top high of 439.44, 439.50, or 439.50 at that peak C, if it can go above it just by a penny, that'll start leg D. That's not good enough for me. This leg that's coming up, if it's going to break to a leg D, it needs to be superior. It needs to be over 444. I mean, that's 10 points higher. That's a big ask because of the big weekly single leg. It's actually a leg B, but it almost looks like a single leg B. But look how it's helped the monthly chart, this big spike to the upside. And that's what I was talking about before. And I've been saying this to subscribers, what we've been trying to do is to go into what's moving. I don't want to go into something that says, it hasn't acted well, but now it's starting to improve and it should do well. I don't have that time frame because I've got so many charts on the dailies that have this left side, right side price time match with the bar symmetry is not quite there because the plumb line has to be moved in most cases to the right. So all I can say is that whole of next week, from the 13th to from the 12th we saw, all the way through to the 15th, 16th, to the end of the week. That's going to be really important for me because that's the weeklies. The weeklies are culminating in the Chapman Wave methodology, the time sequence that I was looking at. But the weekly charts will really improve if there are gains to be made after Fed speak today, going into Friday's close. If that occurs, to me, that's a very important aspect because there are a whole bunch of things that I just can immediately eliminate and say, you know what, I can now look at this market in a different way. If we can survive the daily charts going to those Ds and Es, etc., and then the weekly charts I can look at fresh. I want to be able to do that a week from Friday. Well, certainly this Friday, but a week from Friday is really important just in terms of the overall higher highs and higher lows patterns that we've been looking at. It's negated the H to M formation in the Chapman wave. Basil, can we look at CYFRF? CYCRF. Is that what correct? No, I didn't do that right. CYFRF. CYFRF. There we go. And that is, I had this all notated. I think we've done this before. This is Sol. Yeah, I can't even see it. All right, so you see this chart? You see that big spike in the weekly chart? Long-legged doji, Sol Strategies Inc. Oh, no, I don't think I have looked at this one. All right, we've got a break coming up. I'll do a little bit of work on this. In fact, I'll just type it in here. Did you tell me what it is? No, you didn't. Sol Solutions. Is this Solar Solutions? Sol Solutions? All right, I'll find out. Now, let's see. The Dow's at 218 and the S&P's at 27. Holding in there. Not bad. I'll be back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So we're looking at Sol Solutions Inc., environmental compliance, resource management, hazardous materials management, trading at, I just looked at the price now. I looked at it and I thought, wow, 2050. No. 2.04546. So this is just a $2 stock. But look, it's got the patterns that you look for. I like the pattern in the sense that it's making higher highs and higher lows. But wow, I mean, you're buying it at 240 and suddenly it's at 150. A big percentage changes. But Peaky asked for it. Peaky is able to look at stocks that are either at $2,000 or $2. So I'm going to say in this particular instance, I think you've picked up. Now, this is government. It tries to get government contracts. Now, who's going to say whether or not there are going to be many more compliance, etc.? But that, when legislation is issued, the departments that do the work have to follow the regulations. So I like this in the sense that it's got the volatility that you like, but it has more upside volatility than downside volatility as I see it. I haven't got the monthly chart notated yet, but let's just call this A, B, C, D, E. So this here is an E. I like it. So this is not for the faint of heart, but in your case, I would definitely. That's also a crypto. Oh, it's a crypto play? That's not what it said when I looked it up. Oh, if it's a crypto play, that's something completely different. Gosh, I looked it up and it said exactly what I typed in here: environmental compliance. All right, well, you know what you're doing. Okay, I'll believe you. If it's a crypto play, and then it hasn't participated as well as the crypto. Let's look at Mara, slightly different area, digital asset technicals, Bitcoin mining. It's not participating. That's the reason why I want you to stick to the IBIT, which we have. That's participating exactly with, look at that, beautiful, with the Bitcoin. All right, all I can say is, now I have to find the symbol. I think it was a CYFCFRF. Oh, nice. Thank you. Got that. I would just say hold it. In your case, I would just say hold it. I would even add to it if it just pops over if it pops over 2.4290 and goes to 91, if you're watching it that closely, I would add to it. That'll be leg D. I suspect if it actually can get there, it's going to go quickly to 252, 253, and that means that you can keep this as a core position if you have anything lower down. All right. Okay. Next thing we wanted here is, where did it go? I was asked about BRK.B yesterday or the day before, and I completely forgot about it. So, yeah, Berkshire Hathaway B shares up at all-time highs just 4 sessions ago. And then over the weekend, Buffett said that he was going to he basically sign off. I don't know if he really signs off, but anyway, he said that. There's a potential 539 round number high on the 2nd of April. And then what does it go to? It goes to 542.07 on the 2nd. That could be a potential double top. All I'm saying is, if you are long Berkshire, there's going to be a different way that you have to look at it from now on. But the chart is the chart. The chart says it's holding so fantastically. It doesn't know anything about a bear market. It is in a major bull market. The chart tells me that in 4 or 5 weeks' time, there's a really good chance that it will trade between 497 and 488. And I'll just put that in here and say I might be wrong about this, but I'll put it into the weekly. 4 right there, just in that area. And that's going to be the clue as to what happens next. All right? It could still go to new highs, but I'm looking at about 4 weeks or so. At some point, there's going to be a sudden slide, and that's going to be the big test for Berkshire going out 2 months or 3 months. All right? Now, the other thing I was asked about, and I can get to it. Okay, that was TIGR. I did that yesterday. I said, yeah, it can start your position. It's looking pretty good. This is UP FinTech Holdings, a broker like Robinhood over in Asia. I said it's acting quite nicely, and I suspect that the real test will be if it can break and close above the high that was made on the 19th of March. Was that the night? Yeah, 19th of March, $10, round number $10. As it stands right now, it looks like it wants to go to 10.01 to start leg D in the weekly chart. The key support now is a little different to where it was. I call it at 880 to 858 is the key support. All right, let's continue. Did that. Oh, CrowdStrike. CrowdStrike made a peak D. It's pulling back. Hack is what I've been talking about for ages to say that we want it as part of a portfolio. Just didn't do it. I mean, there's so many other things that we've done that have mostly worked out well. Some did okay, but we got stopped out on the way up. But that's just the way it is. I can't complain because the portfolio has really done nicely. 76.10 up, down 9 cents with Hack. And this Hack to me says that at some point in the next 3 months, it's going to test the high that was made on the week of the 14th of Feb of 82.83. And what is it? It's the prime cybersecurity ETF security stocks. Look at that. Chapman green Roman candle last month. And so far, the month is good because we're above that high that was made. So I do like it. How do we get in? I have to wait for a pullback to get in, but I really would like to be in for the longer term. We used to have bots. I haven't even looked at bots lately. Bots is the robotic ETF. It didn't look as good as the Hack, but it is still doing very nicely. Peak A, peak B. Is that a B? It looks like it's 26.16 to 26.15. No, that's 16.16. So that's your peak B, C, D. All right. So bots is holding well, but it hasn't got the same kind of momentum that Hack does, cybersecurity. Okay, let me just put this in here. This is an A, B, C, and a D right there. Little two doji candles. All right, watching that closely as well for later on. Okay, HIMS, HIMS, Hims and Hers. This is in the healthcare. Big spike, beautiful move. I know I remember Jacob talking about this favorably a little while back, and here it is at 51.75 up 231. Nice action. Let me just talk about this inverted Chapman wave Roman candle from the week of February the 21st. Hit 72.98. If at any point, usually I say within 2-3 bars, but I think it's applicable here, that if at any, on a weekly basis, if there's a close in HIMS above 67, Above 6 at close, above 67, it should almost immediately try to attempt at 72.98 high. Well, it's a long way to go. It's at 51 right now, 51.72. I'll be right back. Basil Chapman, Titan.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So something flashed here from my streamer list at $5.60, $5.57. Quad/Graphics Inc., Print Productions, Digital Marketing, Creative Solutions. So many companies do that. So this has got an A. What's the time? Oh, I'm running out of time, so I don't want to waste time on this. ABC, it went to a peak D in the monthly chart. It went to an A, B, only a C in the weekly. And it started a brand new move. It's up 22 cents at 5.57. I'm not sure why this is acting well, but look at the technicals. They're holding. So at 5.57, I would just say if this thing can get to 5.64, then the 5.84 200-period exponential moving average will become a magnet, but it must hold 5.36. All right, so let me just sum this up. Did I do Amazon? I think I did. Amazon is trading. It should go to a leg D. It's up $4.20 at 189.12. Now, I don't know what the news is, but the market just suddenly took a hit in that 5-minute chart peak D right there. And as I said before, when I'm looking at these charts, on Fed day, very often, if it's strongly up, it'll pull back some as it goes into the Fed speak hour. If it's down sharply, it'll come back up again as it's waiting. It's what happens afterwards. I'm just going to make it clear for my charts. If the Dow is up 180, it really needs to be up quite a bit, up 180 or more after 3 p.m. I think that's very good. If it's down more than 120, that says, stalling motion, and whatever the Fed said does impact the market. But I really think it's tariff. Tariff Trump is really the issue here. So we'll see what happens at that time. So with that said, I just wanted to mention that within the context of the rotation that we're seeing and the different charts, peak B in some, peak C in the others, so far, there should still be higher highs to come. That's just the way the charts, because the technicals are still very strong. So I'm going to keep that in mind. That's how we're playing the market. We have no shorts at this particular time, and we'll see what happens at the close. Have a wonderful rest of the day, and stay tuned for Steve Rhodes. Check out my opening call daily news.